Tanvir, I think this is likely to be a sort of market expected sort of event because I think the Fed has adopted a very transparent posture for a while now. I think that the Fed is likely to exercise its new mandate, or not the new mandate, its new inflation policy, which is to say that they're going to be very patient. And I think coming out of this Jackson Hole, there's going to be a lot of the repetition that you've seen the Fed already announce. So I don't think the market's going to be surprised either way. The Fed is very much on a wait and see sort of mode, and I think that's correct because there are a lot of cross currents in the markets right now. There are lots of supply bottlenecks. You've seen prices move around pretty sharply. But at the same time, the recovery in the US is very strong. You've seen some very good numbers coming out of these second quarter results. My expectation is that guidance in the third and fourth quarters will continue to move up. But for the time being, there are these uncertainties. And I think that that's what's going to be expressed during the Jackson Hole meetings.
Chinese tech stocks, what's your positioning there? What's the view?
Well, there's been a pretty rapid sell-off in many of these tech stocks recently. I think the baby has actually been thrown out with the bathwater in many cases. We find that valuation levels for a lot of these wonderful companies have actually come down where we had been a little bit cautious in terms of taking profits, not completely selling out of positions, but tapering some of our positions before. The results that we've seen for many of these stocks have been absolutely fantastic. So, we are actually, getting back into some of these names and closing some of those underweights that we had been carrying for the last few weeks.
Okay, interesting. I understand you can't talk about specific stocks, but that's interesting that you're getting back into that segment. How much of China slowing down, Anik, would be a problem for the robust recovery in the US?
Well, China is one of the biggest contributors of global growth. It's one of the reasons why we think that central banks around the world, including the Fed and the ECB, will be fairly cautious right now. So, there are these concerns on the virus. There are these concerns on some of the surprise policy changes that we've had in China. And there has been a little bit of a reaction in terms of slowdown. So, for those reasons, I think that the liquidity situation in the market, particularly from the central bank monetary policy, is likely to remain relatively accommodative, certainly for the short term.